barrels per day.
190 to 166.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the gold charts. Just before I start today's video, for anyone who is interested in joining my signal service, please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small joining fee of $29.99, and you can find this website link in the description of today's video. But let's talk about gold. I think gold traders are finally coming to their senses here. This is a move that I have been predicting for some time now. Of course, after Friday's CPI figures, we saw that initial move towards the downside. It was a knee-jerk reaction, and then ultimately we actually ended the trade session pushing up against a 50-day EMA, which I was quite surprised about. And I think that's just traders basically selling a lot of their equities and going into the safe haven gold. But what many of these investors don't realize is that, of course, last Friday's CPI's CPI's reading basically means that the Fed now has to become a lot more hawkish, and that is a terrible environment to hold gold in. You do not want to be holding gold when interest rates are getting hiked, and I think what we are now seeing, of course, is gold starting to break down here. So we're now down to 1830. The big question is, do we find support at this 0.38 Fibonacci area, this supportive area? If we take out 1830, guys, and we go to, let's say, 1820, I think that opens up a trapdoor all the way down to 1770. I do not like gold here. We're just on a cusp of a brand new Fed meeting, which kicks off tomorrow. We get the Fed and the dot chart, most importantly, as well. As we are now halfway through a year, we get the dot plot chart from the Fed, and I think that they are going to be hiking interest rates at a very aggressive and fast pace going into the latter end of this year after Friday's data. So I definitely would be bearish on gold. For those who've been watching my videos for some time, you know how bearish I have been as of recent on gold. I have a 1500 price target going into the latter end of this year, which surprises many. I know if you turn on Bloomberg News or CNBC, you have many investors and analysts coming out saying that gold is going to be the next big thing and we're going to go to 2,500 and 3,000. But guess what? They were on the news saying the exact same thing during the 2008 and 2009 financial crisis, and gold only went as high as 2,000, and then eventually it broke all the way back down to 1,100. So sometimes it's good in trading not to always follow the crowds and to kind of trust in your own instincts, and that is my current instinct here, that gold is going to break down. I think ultimately we go to 1770 within the next couple of weeks, and then eventually we break down to the bottom of this fib retracement pattern down at around 1680. So very bearish in gold, and I'm glad to see the breakdown during today's trading session.
500,000 barrels per day.
190 to 166.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.